Good evening, traders and investors. Will back here with another one, coming to you with a Sunday night video in terms of the top 5 options plays for the upcoming week that I'll be looking at to trade in my own portfolio. So in today's video, we're going to go over those top 5 options plays for the upcoming week, but also recap last week's top 5 options plays, all once again of which have performed extremely well. Ever since we've started this series, we have not been assigned a single option from the options that I've been mentioning on the channel. So it's been a very good ride so far. Hope everybody has been enjoying it as well. Keep in mind, guys, on the channel, we do like to write options, more specifically writing weekly put options. It provides very decent income to complement a portfolio, and it's a very easy strategy for anyone to learn, whether you're a beginner, intermediate, or advanced investor. Now, we're going to be going over a few rules in terms of how I run the put wheel strategy. The put wheel strategy is very simple, guys. It just entails selling puts at designated strike prices for a certain amount of premium. And if ever the stock remains above those strike prices by the end of the week, you just collect the premium in your pocket and no change at all. So we'll be going over the rules of that strategy, very, very simple rules that I have put together for you guys, and then get into last week's top 5 plays, and lastly conclude with this week's top 5 plays. So without further ado, guys, let's get right into it. Let's go over the portfolio rules that we use here for the actual strategy. So you'll see here very, very simple rules. Number 1, has to be a very solid company, guys. Please never write any puts on companies that you do not want to own. It is rule number 1, more specifically because it's just very tough to manage a position if ever you get assigned in a stock that you don't particularly like or don't know much about. It's just a little bit cumbersome to manage the position. It's much easier to manage a position if ever you're assigned on a company that you truly love. It just makes managing the position in terms of emotional and mental stability a lot easier for that respect. Number 2, we want to be writing on red or flat days. This is the best time to be writing puts, in my opinion. If on Monday or Tuesday morning you get nice little 2, 3, 4% sell-offs, well, then you can target even lower strike prices for the Friday expiry. So that's why we love to write on red or flat days. You'll never really see me writing options, specifically puts, on a green day. Number 3, we want to be writing puts on stocks that are in monthly uptrends or at least long-term ranges, and you'll see that most of these plays are indeed in monthly uptrends or at least in long-term ranges. Once again, it just increases our probability that the puts expire worthless by the end of the week. We just keep that premium in our pocket. Number 4, no earnings this week. This is absolutely crucial. This is very close to rule number 1 as well, right? These 2 rules should never be skipped over. It has to be a solid company, and the company need not have earnings this week. Please do not write any puts on stocks that have earnings in the week. Earnings can be very, very volatile and can surprise heavily to the downside when you're least expecting it. So just to keep things simple and just to keep the strategy extremely consistent, if you want to have the best results and no negative surprises, just avoid writing puts on any company that has earnings this week, guys. In terms of the past year that I've been showing my portfolio on the channel, 9 out of 10 positions that I've ever been assigned so far over the past year have all been earnings plays that I took, although conservatively, yet still went the wrong way and ended up getting assigned. Now, managing the positions after that, when you're an experienced trader, is not so bad, but I would not recommend it if you're just a beginner or even intermediate trader. You really need to have a good portfolio management in terms of how you manage the risk and how you have emotional control over the position. So that's why I just recommend, guys, just don't do it as a whole. Number 5, the stock needs to be at a support area or a breakout retest area. You'll see that most of these plays that we present on the channel here are going to be very, very solid stocks at support areas or breakout retest. If you don't know the breakout retest strategy, very, very simple strategy, extremely high probability of success as well. Take a look at Autodesk, beautiful range down here. The stock then proceeded to set a weekly uptrend, breaking out of the top end of this range, retesting the top end of the range to the downside here. So this is the retest zone. That is where you want to be writing puts when you have a good stock presenting that opportunity. So that's pretty much it for the breakout retest trade. Number 6, we want to be targeting between 0.5 to 1% in weekly premium. Now, this is after years of experience of running this strategy, guys. The reason we choose to write 0.5 to 1% in weekly premium is because it represents the best risk to reward in the market. Keep in mind, if you're always writing options on your account value between 0.5 to 1% per week, that's about 26 or 50% annualized per year within this range. Our goal is to beat the market consistently with this strategy. We're not going for home runs, we're going for base hits, and it does always outperform the market so long as you're staying within very conservative targets. Please never go over the 1% per week in terms of the premium. That means if the stock is trading at $100, you want to be writing at a strike price that offers premium between 50 cents to $1 maximum. Over 1%, guys, in my experience, is usually too close to the current market price and could end up with some negative surprises. And less than 0.5% just isn't high enough annualized ROI. This is really the sweet spot whereby most of the options will always expire worthless. We're talking about 95% win rate when we target this range right here. So that's what I love. Before last, we want to be writing at or lower than the expected move. So the expected move is a given probability by Wall Street every single week of how high or how low a stock can go in any given week. If you don't know what the expected move is on a given stock for a week, just go to this free website, not sponsored by me or anything. It's called optionsai.com, and they have a free tool here that's the expected move calculator. And you'll see I have Apple pulled up, and it gives you the expected move for the week here. You can see to the upside and to the downside. So we're going to be using the downside target, and we want to always be writing below this downside target, just once again increasing our probabilities of success and ending that trade in a win. And now lastly, we want to set a take profit at 90% of the contract value. That's just very simple, guys. This strategy, I really only spend about 10-15 minutes in the morning, every single morning, searching for plays right at the open. It's a really hands-off strategy. That being said, you don't want to forget to take profits, because sometimes midway through the week, you can see you might write a contract, let's say at $1, and then it'll go down all the way to 10 cents, which is 90% profit. And then if you miss it, the next day it may jump back up. So we want to always set an automatic take profit at 90% of the contract value, which just means that if you're not in front of your screen 8 hours a day watching the markets, you are secured of taking a profit when the profits are there. So very, very simple strategy rules here. Now, let's go over the top 5 plays from last week and just do a quick recap on how they went. So Google is going to be number 1. Now, Google, we were recommending this one last week in the $138 to $140 range. $140 to $138 was a beautiful area of previous resistance, current area of previous support for your long-term bulls, and the play played out absolutely perfectly. You can see here with a nice little dip on Tuesday morning. You could have really gotten these contracts here as low as about $139, $138 on Tuesday. I went a little bit higher, guys. You can see even in my own account, I did take the Google trade. I took the Google 140s, and we got about 75 cents, which is just over 0.5%. If you don't know how to do the percentages, guys, just do half of the strike price in cent increments. Let me move myself over so you can see Google 140s. We're looking for about 70 cents. So it's about half of the strike price expressed in cent increments. And if you do the math, let's say you get 0.75 divided by your 140 strike, you'll see that that's literally just over 0.5%. So very, very easy way of doing the mental math in your head to make sure that you're respecting the rules. So we did go with the Googles ourselves. And obviously Google ending well above that area, bulls acting nicely in the support zone, Google ending at about 145. So that was just free premium for us. Very, very happy with that one. The second trade that we were looking for, guys, was Apple. So Apple, beautiful area of consolidation. I keep saying this whole 180 down to about 170 range is extremely solid support, guys. Previous all-time highs, current support levels, which were back tested later on in 2023, in the fall of 2023, and still representing a very juicy area, guys. As long as Apple stays within these levels, I will continuously play Apple every single week it offers the opportunity. So you can see here that on Tuesday morning, we actually had a nice little dip. We were looking for anything 180 and below. So 180 all the way down to 177. And we literally came right down into the zone on Tuesday morning when the markets open, and then obviously retraced during the rest of the day. But the trade was there in the morning, and I did take it myself in my own account. You can see down here, we wrote the Apple 177.5s, which was below our $180 mark that we were willing to trade at. And you can see that we got roughly 71 cents here for the contract. So Apple, I took it a bit late personally myself, but you could have had even 85, 90 cents on the bid here. You can see I got only 71 right above my shoulder right here. So 71 cents. But you were able to get all the way up to about 85, 90 cents. So very, very decent trade on Apple, super conservative, happy with that one. And obviously the trade went in our direction here, Apple ending largely over 177.50 by the end of the week. So very happy. That was 2 for 2 in terms of that. Now, the third trade we were looking at was Alibaba. Alibaba as well, we were looking for anywhere below pretty much $70 and better. And the expected move was about $71.38, this red line. You can see on Tuesday morning, the price came right down into us as low as about $72.27, which did at the time open up the $70 strike for roughly 35.40 cents. So the 0.5% rule was there for a better part of the morning on Tuesday. I did not take this trade myself. I already have some Alibaba shares that I got assigned earlier, but for anybody who was potentially looking at this trade idea, it was a very good trade idea indeed, and Alibaba ending the week largely over that $71 or $70 level. The 70s would have been the best bang for your buck in terms of risk reward. They were there, and Alibaba ending at $76. So that's pretty much 3 for 3 in terms of those trades. Alibaba, very nice trade. I keep it on my watch list, guys. And as long as Alibaba stays in the lower $70 range, I'm extremely comfortable every single time playing the $70 range. Yes, it does not respect our rule of being in a monthly uptrend, but the valuation, which was I was explaining last week's video, the valuation of this one is just so cheap, you cannot ignore, guys. Their price to earnings ratio on a forward basis is about a 10. This company is growing earnings at almost 20% per year. Their free cash flow is absolutely massive. One of the best value growth companies in the game right now, just held back by the overall condition of the Chinese market. But in terms of the company itself, no red flags, which is why I love playing it down here, even if it doesn't respect my long-term monthly uptrend rule so far. Now, moving on to stock number 4, which was Expedia. So Expedia, we've been trying to play this one for 2 weeks in a row. It's just not coming down enough initially early on in the week. So you can see in terms of last week's trading, we were looking for Expedia anything below $130, as close as possible to $125. Why? Because Expedia is the breakout retest rule in motion right now. So you see this beautiful range that Expedia was in. We're now breaking out of it, and you can see it best on the monthly, right? Monthly breakout, and now retest of this range. So we're looking for as close as possible to the top end of this range, which is about 125, 126-ish. Anything below 130, however, is good. So that's what we're looking for, 130 down to 125. But you can see on Tuesday, guys, it only got as low as about 133.63. I was watching premiums on this Tuesday and Wednesday, but unfortunately the 130s were just not opening up, not enough juice on the premium. We were looking for about 65, 70 cents or better for 130 and lower, but it never really opened up. So unfortunately the trade idea was good. The contracts just never came down to where it was juicy enough for us to open that trade. So that's why there was just a no trade on this one. However, Expedia does remain on my immediate watch list. If over the next course of this week, we dip down, it's not going to be featured on this week's top 5 because it's a bit too far away right now, but I'm always keeping it on the back burner, guys. And I'm going to give you a lot of bonus stocks at the end of the video that I just keep on a rotational basis on my watch list, seeing as they're close to support area. So this one, a bit of a no-go, but that's okay. We keep it on the back burner for future weeks. As long as we're staying close to this 130, 125, I think it's a no-brainer play. Expedia's fundamentals, we went over their earnings together on their channel. Absolutely phenomenal fundamentals. No red flags, no reason to not buy the company down here in the 130. My 1-year price target for Expedia is all the way up here, 170, 180. So that's pretty much it for Expedia. And the last one is Nike. So Nike actually did present us a trade opportunity. I did not take it myself because I already have some Nike shares that I got assigned above here at 113. I'm looking to get Nike for myself below $100. But for anybody that was looking to make a bit of an entry play into Nike, we were looking for a $100 strike or better. And on Tuesday morning, it actually came all the way down to as low as about 101.70. When it was below 102 for a better part of the morning, the 100s actually did open up. They didn't open up for a full 0.5% since last week's trading was a shortened trading week. We only got about 40 cents on the bid. But in terms of annualized ROI, even 40% would have been good here, guys, because just consider if we have 40 cents for 4 days of trading, that's about 10 cents per day. per day trading rate, 40 cents divided by 4 days of trading, that's 10 cents per day. And if we had that extra 1 day of trading, we would have got probably another 10 cents, and that would have been 50 cents, right? So 50 cents divided by your $100, that would have been the 0.5% rule. So that's another way to do some quick math. If ever the trading days are uneven, or if ever you're trading midway throughout the week and you want to do the 0.5% rule or 1%, just do it like that. Just do premium per day and divide equally. It's a very, very easy way of mentally doing the math. So they were offering the 40 cents here down here for about $100. So that would have been a very good trade. You can see Nike did close netly above that $100 mark by the end of the week, trading at about 105.63. So that's another trade. Very, very easy trade, guys. Nike, the $100 level, has been acting as very juicy support for a number of weeks. I know sometimes it's gapped down through them, but that has been in periods of ultimate market sell-offs, such as October 22 and last fall as well. Over and above that, Nike really always maintains that $100 mark pretty well. And even at $100, guys, the valuation on Nike is pretty decent considering the fact that they're going through a little bit of cyclicality right now, and their growth is going to resume for the second half of 2024, and 2025 should be a very good year for them. So very nice play for a long-term pick. Now, that's pretty much it for last week's top 5 plays. Let's get into this week's top 5 plays, and you'll see a lot of them are coming back. So Apple, once again, same reasons here, guys, as we've explained before. Juicy support area, 180 all the way down to 170. The expected move on Apple for the week is about 179.46. So we want to be writing lower than 179.46, potentially the 177.50s if they open up. So let's take a look at Apple's option chain for March the 1st and see if we have enough premium. As you can see, the 177.5s, guys, we're looking for roughly about 85-90 cents on the bid, and you can see that's not yet available. Even the 180s are not yet available at our designated price. So we really need Apple here on Monday morning. If Apple takes a little bit of a dip into the 180 range, that is probably going to open the 177.50s. Keep in mind, we're looking for 85-90 cents on the bid. Very easy, smooth trade on Apple. Just be below the expected move. Even if Apple opens flat on Monday and stays around here, guys, I really even wouldn't be opposed to playing the 180s directly, depending on how we open Monday. Obviously, if we open minus 1-2% and we open about 180.5, well, we're not going to go and take the super close 180s, right? We're going to go one strike further and farm the premium from there. So that's the trade on Apple. Trade number 2 is once again going to be Google. Same reasons as the week before. Beautiful area of resistance, weekly support area coming up as well, and a nice tightening range. So if we progress here Monday or Tuesday morning into lower moves for Google, the expected move is 142.36. So we want to be lower than the expected move, preferably targeting the 141 down to 138 range. Very easy trade for Google. Again, if you take a look at their premium, we're going to just pull up the Google premium. Sorry, it's right here. And take a look, is the 138 to 141 offering some good premium yet? Well, as you can see, not yet. So we really need Google to come down. It's a bit too high off of that area for the premium that it's giving right now. You can see even the 141's only paying about 28 cents. We want to see about 75 cents on these bids right here for it to be worth our while. So if Google opens up red Monday or Tuesday, coming down into the expected move area, roughly the 142 zone, then it should be opening the 140s, maybe even the 139s. So those are the ones I'm going to be looking out for on Google. Even wouldn't be opposed if Monday opens relatively flat or slightly down into maybe the 144s, 143s. I may even go for the 141 strike, just because that whole area 141 to 138 is extremely solid. Now, play number 3 we're going to be looking at is once again a play that comes up almost regularly in the past 4 weeks of trading is going to be Tesla. So I mentioned this one a lot on the channel. Tesla obviously being plagued with higher interest rates right now and slowing EV demand. Where we want to be targeting on Tesla is this juicy area of support right here, 180 down to 170, as close as possible to 175, 170 as we can get. The expected move for the week on Tesla is down to about 184.36, this red line right here. So we want to be under the expected move, preferably as close or under to $180 as possible, really getting in to that support zone and closer to this downtrending trend line that you see right here, roughly in the mid 170s at this point. So if we pull up the premium right here for Tesla, below 180, you'll see that they're offering currently about 78 cents. not quite 0.5%, but very close, about 78 cents. So if Tesla has a red day on Monday, let's say we open 188, 187, couple percentage to the downside, or even on Tuesday, down towards this expected move, that may even open up a bit lower for us on Tesla, talking about the 177.50s. You can see here there's only about 52 cents on the contract right now as of Sunday night. But if we do open up red into the morning, it should provide us a decent cushion, guys. 177.50 would be pretty much, almost a full over almost 4% below the expected move. And from Friday's close, that would really be an 8% move to the downside right there in our support zone. So those are the ones I'm going to be looking for here, guys. Obviously, if Tesla opens super red tomorrow morning, let's say they open minus 3-4% and they go past the expected move in one single day, we want to get as low as possible, guys. That may even open up the 175. So just keep a close eye on these three strikes right here. 175, 177.50, 180, depending on how red we open Monday morning. Obviously, if you open green, may have to wait for Tuesday. Monday and Tuesday are going to be the ones to watch for Tesla in that respect. Now, the fourth play we're going to be looking at is Caesars Entertainment. We've covered this one a couple of times on the channel, and I've even played it on my own account pretty much the past 3 weeks, every single week. So Caesars Entertainment, obviously casino and entertainment brand. We're looking for pretty much the 40 to 38 zone. You can see how often in the company's history has this played as support. Now, why I like this? Because it's a long-term range, guys. We've been in this range pretty much for about a year and a half at this point. So this lower bound right here, 40 to 38, is exactly what we're looking for. And we're getting kind of close. The expected move on Caesars, they've already had earnings last week, and the earnings were pretty good, actually. So the expected move for the week is about 39.29. So we want to be below that on Caesars. Now let's take a look at the premium below the $39 strike to see how much is on the contract. You can see as of now, on the $39 contract, it's only about 9 cents. We would need to see as high as about 20 cents on the bid right here for it to be worth our while. So we're going to be looking at Caesars. If Caesars can come down on Monday or Tuesday, down potentially into the $40-something range, right? 40.4, 40.5. It should be opening up the strikes to us. Take a look, guys. We're at 41.65, and about $1.50 away is the $40 strike. Excuse me, that's the wrong one. The $40 strike. They're already paying 0.5% right now, right? So it stands to argue if this stock drops about $1 more into Monday to about 40.5, that should be opening the 39.50s or even the 39s, which are under the expected move. I'm going to be looking for this. Obviously, if Caesars opens like 3-4% negative to the downside for some reason, opens, towards the expected move. Expected move right now is about 5.7% to the downside. So that's a significant way away. Let me just double check that because it is a fair way. Maybe I have last week's earnings pulled up. I apologize if I do. So it's about 40.15 actually. My apologies, guys. I forgot to adjust this on the chart. So we're going to be looking for below $40. The same rules do apply. If we can get $39.50, $39, that would be a very good trade in my opinion. Now, our last one is going to be Palantir. So Palantir is a breakout retest trade as opposed to the support trades that I've been showing you guys. Palantir is the breakout retest. Why? Beautiful weekly uptrend here. We just broke out of this zone. It was previous 52-week resistance. It was previous support in the past. We're now beyond these two lines right here, which are about 21.5 down to 20.5. Breakout and retest of the zone. So if Palantir continues to move down into the Monday and Tuesday session, just keep an eye. The expected move, guys, is 21.9 roughly. So we want to be getting as close as possible to these two yellow lines, 21.5 to about 20.5. If I can find the 21s, the 20.5s for the week, that would be a very good trade. That represents a downside cushion of roughly anywhere between 7.5 to about 9% to the downside, right? So significant cushion and a decent level of support to be basing our trade off of. Now, Palantir, if we take a look at their contract value, let's go have a look here together to see if the 20.5s or the 21s are going to be offering decent premium. You can see down here that the 21s, as of right now, only offer about 8 cents of premium. For Palantir, for this to be worth it to us, guys, we're looking for about 11, 12 cents on the bid. You can see that they do have that for the 2150s. The 2150s are kind of a bit too close to the expected move for my liking. It is Palantir. Palantir does move fairly aggressively. So if we get a bit of a sell-off here, continuation into Monday and maybe Tuesday down to about $22, that should be opening something with a 20 handle in front of it. So maybe the 20.5s, even the 20s could be good. Those are the ones I'm going to be looking for right here. You don't see them right here, but if we expand the chain, you'll see, guys, that there's just not enough premium, even at about $23. If we stay flat on Monday, there's just not enough premium down there already. You can see the 20s and the 20.5s almost offering nothing. But if we get a nice little drop in an early week, that's when we're going to go shopping here, guys. 21.5 all the way down to 20.5. You know, I really want the 21s to 20.5s for me specifically. So those are going to be these two contracts right there. I'm going to be wanting to see at least 10, 11, 12 cents on the bid if that happens. Obviously, for some reason, guys, Palantir on Monday or Tuesday just has a complete, you know, breakdown completely, like 7, 8, 9, 10%. Then we're obviously going to be going lower here into our strikes, potentially looking for maybe even something like the 19s, right? So just keep that in mind for Palantir stock. Those are the trades I'm going to be looking for. So that's pretty much everything that I have for you guys for the week. There's only one earnings play that I'm looking to play after earnings, and that's because they have earnings earlier on the week. It's going to be Unity Software. They have earnings Monday after the close, so potentially there may be a trade here for Tuesday morning at the open. Unity Software has a significant area of support below it here, which we're going to be trying to base this trade off of. So you can see this beautiful area of support, which is about, you know, anywhere between $27 to $25. The expected move for earnings is 27.19 to the downside, guys. That represents downside before earnings of roughly about 11, 12%. So if I'm going to be looking to play this, I need to see this stock hold within the expected move after earnings. If it goes down 11, 12, 13, 14, 15% into this 27 area, I'm going to be looking as low as possible, guys, for 0.5%. So maybe $22, $23 for the remainder of the year, of the week, which is really the bottom area of this massive support range, about $22. So just keep an eye on those premiums, $22, $23, really, if this stock gaps down hard. And obviously it's going to be no trade, guys. If the stock opens on Tuesday below our previous area of support, let's say, you know, it has an extremely disastrous earnings, opens 30% to the downside for some reason, and opens below 22, it is a no trade for me. I would really like this one if it opens the day at or near the expected move, $27, $26, then we can go shopping for about 24, 23, 22 and be fairly safe about it. I love this company, love what they do. It's just unfortunate they've been hit because of a byproduct of higher rates, and they don't really bring in any net income, but a very solid company nonetheless. Would have no problem playing shares down here. So those are all the plays that I have prepared for you guys today. Hopefully that was helpful. And if it was, consider dropping a like on the video. Would really appreciate it for the algorithm. And as usual, guys, if you're new to the channel, consider subscribing. We do these top 5 options plays videos every Sunday night to prepare for the week. And we also do Monday through Friday daily market recaps, whereby we cover any earnings, any important earnings that were on the day, technical analysis for all our major indexes and major tech names, and look into my portfolio and my own trades on the Monday and Friday videos. And as usual as well, guys, if you have any questions whatsoever, please leave them down below in the comments. If you want me to look at any stocks, any options, technical analysis on anything, or if you have any questions on the strategy, feel free, guys, to always leave a question down below, and I'll get back to you always within the first 24 hours. So take care, guys. Have a beautiful week of trading, and I'll see you in tomorrow's daily market recap video after the close. So take care and peace.